Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine. Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello again. Good morning, traders, and welcome to London Open session, or London Session Open, sorry. Today is November 3rd, 2025, and we're going to break down everything that is going to happen next week, fundamentally and technically. First of all, as always, we'll go through all the high impact news. We'll share now the weekly high impact news calendar, and we'll go day by day and see all high impact news, and then try to align those with the technicals. We'll go to the charts and try to align with the technicals. All right. Okay. So let's go full screen. All right. So everyone can see my screen. Yeah. All good. All right. Let's get to it, guys. Okay, so welcome to a new trading week. Let's see what we have on Monday, which is today. We have the S&P Global Manufacturing PMI. It's expected to have a slight beat to the previous number, which is at 52.2. Anything above 50 is expansionary. Everything below 50 is in the contraction territory. Okay, so it is expected to like the manufacturing sector in the US is expected to expand. The forecast is slightly above the previous reading, so anything above the forecast and the previous reading would be positive for the US economy and the US dollar, and anything below the forecast or the previous or even below 50 could be very negative for the dollar and the US economy. The next one is the ISM manufacturing PMI. The first one was the S&P Global. So this one shows contraction. The previous reading was at 49.1. The forecast is a slightly better reading at 49.4, but that does not mean anything because we're below 50. Okay, like we're less like it's less worse. Okay, so it's not good, it's less worse. So the previous or less bad, I'm not sure what the right word is here. So the previous reading 49.1, the forecast is an increase, a slight increase at 49.4, but it's still below 50. And as I mentioned many times before on those live streams, the PMI numbers, once you are below 50, it means contraction in the economy. And the next one is the ISM manufacturing prices. So the previous reading was at 61.9. The forecast is an improvement at 62.4, which could be positive for the US dollar. So that's it for Monday. All news or all high impact news are coming from the US. So let's move to the next day. Next day is Tuesday, November 4th. We have the interest rate decision coming from the Reserve Bank of Australia. The previous reading was 3.6, and they're expecting to keep it unchanged at 3.6. Loving nature guy, I'm good. How are you? Thank you for watching. Okay, so let me check if you have any questions before I keep going. All good? Okay. So the previous reading was at 3.6%. The forecast is also at 3.6%, meaning they're expecting no change in interest rates. It's going to be 7:30 a.m. Dubai time, the RBA interest rate decision for the month of November. And so most probably it will come at 3.6. Nothing will change, and no high volatility is expected after this reading. The JOLTS, job openings in the US, we still don't have a forecast number, but anything above the previous or anything above the forecasted number, which we don't have now, should be considered as a positive reading for the jobs market and as well as for the US dollar. If it comes in lower than the previous or lower than the forecast, I believe they're forecasting, or like the last couple of articles I read coming from the US government, I think they're expecting like a stronger jobs market, especially that they've cut 50 basis points over the past 2 months to boost the jobs market. So I think we will have good numbers. But anything above the previous reading should be considered as healthy for the jobs market, and anything below the previous reading should be considered as negative for the US dollar and the jobs market, and would mean another thing. Uh, that would mean if it comes in lower than the previous reading, it means that the Fed should cut even further, should cut rates even further than what they've already done, because they need to boost the jobs market. Makes sense? Someone is saying, is the Australian news are important to gold? Yeah, Australian news usually, because the AUD as a currency is actually it's considered a commodity currency, meaning that they exchange commodities using the AUD, as well as the Canadian dollar, which is connected to the oil prices. The Australian dollar, yes, is connected to gold and different commodities, not only precious metals, of course. So yes, Australian news are important, but in this case, when we discussed the Reserve Bank of Australia interest rate decision, since there will be no change, and it is expected and highly priced in that there will be no change, so I don't expect a very high volatility around this release. Okay, so that's it for Tuesday. Let's move to the next day. I remember Wednesday was a big day. Yes, it was a big day. And okay, so let's see. On November 5th, 2025, Wednesday, we have the ADP non-farm employment change. This number usually comes out before the non-farm payroll. Last month, we did not have any NFP releases because of the government shutdown, but we got this number last month, the ADP non-farm employment change. And this, guys, by the way, this number is indicative of, like, traders use this number to get an idea of how the NFP would be, or how the NFP numbers would look like. So it gives you an early indication, but it's not a hard rule. Everything can, like, this can be very good, and the NFP or the actual NFP would be bad. So does not need to be always like this, but most of the time, yes, this is indicative of the NFP number that comes 2 days after. Usually, the NFP comes in at the on the first Friday of each month. So the first Friday we have is November 7th, but since we have a what's it called, a government shutdown now, we're not expecting any NFP numbers, or the high importance numbers that we've been waiting for the past month. Now they're in their 1 month, 2 days. They've been shut down. The government has shut down on October 1st. Now we're November 3rd, so it's been over a month of a government shutdown. So let's see. Some theories say, or some people are expecting the government shutdown to extend into 2026, or at least last for till the rest of the year. But we cannot tell. It depends on this is internal policies in the US, and as long as you don't work there, there is no way on earth you would know. Okay, so the ADP non-farm employment change, the previous reading was at minus 32K. The forecast is an improvement at 28K. If the actual comes in higher than 28K, or as expected, this is positive for the US dollar, or this would be considered as positive for the jobs market and the US dollar. Next, we had the ISM non-manufacturing PMI. We had the manufacturing PMI on Monday, if you remember. Now, on Wednesday, we will have the ISM non-manufacturing PMI. The previous reading was at 50. We still don't have a forecast number, but anything above 50 is considered expansionary. Anything below is considered a contraction. So the next one, non-manufacturing PMI, I think this is for the quarter, not the month. The next number, the previous reading was at 50.8. The forecast is a slight beat of the previous reading as 51 points. So it's still above 50, and it's better than the previous. So let's see what the actual number comes in. If it comes in higher than 51, this is considered positive for the US economy. If not, it would be considered negative for the US economy and the US dollar. The next one is the non-manufacturing prices, the ISM non-manufacturing prices. So the previous reading was at 69.4. We still don't have a forecast number. If it comes in higher, that would be like positive for the US dollar, because higher prices mean higher inflation. Higher inflation means higher interest rates, which would mean that the Fed will need to stop cutting rates to keep rates higher for longer, so that they can control the rising prices. Next, we have the S&P Global Services. Should we get changed to GMT5? Okay, so it depends on your country. If the time zone changed in your country, or the daylight saving is activated in your country, yes, you should change. But if not, no, you don't need to change. So, for example, here I'm in Jordan. We didn't change the time, and in the UK they did not change the time. So that's why the London session open remained the same, did not change. So it depends. If you watch this usually, and today the time is different than last week, then yes, you need to change. Okay, so what else did we? Okay, we were talking about the ISM non-manufacturing prices, and then we go to the S&P Global Services PMI. On Monday, we had the S&P Global Manufacturing PMI. This is the services PMI. Services is, like, not only my opinion. In general, the services sector is the backbone of the U.S. economy. So this number is even more important than the manufacturing number. Sorry. The previous reading was at 55.2. The forecast is 55.2, so no change. And the actual number, if it comes in higher than 55.2, it's positive. Comes in lower, it's negative, but not very negative, because it's still above 50, which is expansionary. Then, last but not least, we have the crude oil inventories on Wednesday. So the previous reading was minus 6.858. So a huge shortage in the inventory, which caused the okay, guys, that's London session just opened. So I'll try to wrap this up quickly so that we can go to the charts and see the price action. Anyway, what was I saying? Yeah, we were talking about crude oil inventories, and I think yesterday there was a meeting for the OPEC Plus committee. They met in Riyadh, I believe, and they decided to increase the production of oil. I think 130 or 140,000 barrels every day. That was yesterday. So I believe those inventory numbers are causing this move by the OPEC Plus. They will increase because there is a shortage, and that's why we saw. And by the way, this number was bullish for the oil prices. The forecast number, if it comes in like, for example, minus 1 million instead of minus 6 million, that would be better for, or like bearish for the oil, it will go down. If it comes in like as a deeper shortage, like minus 10 million, for example, that would be bullish for the oil because it means higher demand than supply or tighter supply than demand. Okay, so that's for Wednesday. Let's move now to Thursday. We have the Bank of England interest rate decision. The previous reading was at 4%, and the forecasted number is at 4% as well. So I believe the actual number will also come in at 4%. So no big swings expected around this number. Overall, the Bank of England will keep the rates higher for longer because they still haven't reached their 2% target of inflation. All right, so let me check if you have any questions before we. May you please analyze for me? Okay, someone asked if I can analyze Euro USD. Yes, we will. We answered that. We answered that. Okay. So, do we have anything? No, that's it. We don't have anything on Friday. So Thursday is the last day of high impact news. On Friday, there will be no high impact news unless they reopen the government and they decided to publish the NFP numbers on Friday. Otherwise, that's it for the high impact news calendar. Let me stop sharing now and move to the charts. Let me share my chart window. First of all, okay. Start with the monthly because today we opened a fresh monthly candle. So it's good to see how the previous candles closed. So share this. Yeah, as always, we start with. You have cleared all doubts. Great. Good to hear that. All right. So as always, we start with the DXY. Okay. So let me zoom out. We are in an uptrend. We saw a big rejection from this area. It tried to break below. It swept the lows here, and now we have a very bullish candle closing the previous month, which was October. All right. So this is a very bullish candle. Any drop toward the 80 or 98.5 would be considered as a buying opportunity for the XY. That's as for the monthly. Let's go lower and see what we can get. We go to weekly. How did the week close? Yeah, the week closed very bullish. Look at this candle. It's a beautiful candle. Now we're heading to clear those highs, or like to sweep those highs. This is the swing level on the daily time frame. I'll show you now what I mean by swing level. But once this is broken, the probability of a trend reversal to the upside becomes very, very high. Okay, so let's move now to the daily. Okay, the daily chart is very nice. It's very bullish. It's very healthy, giving us higher highs, higher lows. All good. Very healthy trend line. So now, once it breaks above this level, because look what we had here. It broke this low, and once it breaks this high, we will be breaking the swing level of the non-failure swing. So it did not fail to break previous low. It broke the previous low, but it got rejected from it. So once it breaks or clears this high and closes above, we might be seeing stronger climbs to the upside by the DXY. Okay. So the daily is still very, very bullish. 4 hours. Let's see if it's losing steam on lower time frames. Yeah, somehow yes, it is, because as we saw on the monthly, remember when we saw the big monthly candle here? 1 second, let me show you. And I told you here, and I told you we might be retracing or correcting to the 98.5 or something. Remember this? This is what I mean, or this is why I'm looking for lower time frames losing steam, because I want to know when this starts, because this opens opportunities for me to enter shorts on GBP, on Euro, on whatever it is that is priced against the US dollar. Okay, so we're expecting the dollar to go up based on this analysis. So it means that everything else should be going down, especially the currencies, and especially the Euro USD. All right, makes sense. We're done with the what's it called, the dollar index. So yeah, before it goes down, I want to see it break above this and close above this at least for 1 or 2 nights. Then and only then I would be considering a like only then I would consider the drop afterwards. But if it drops from here, the bullish scenario becomes weak. I want it to break above this and close above this. Once it does, even if it goes and corrects all the way here, I don't mind. But I want it to break here first and close above, so that I can confirm the trend reversal. Okay. Has a gap down? Why is it not filling? Interest rates have been lowered. QT is applied. Why is it going up and not filling the gap? Which gap are you referring to? 1 second. Okay, so one small misconception about gaps, that they have to get filled. No, my friend, they don't have to. For example, mine does not have any gaps. You mean this one? You mean this one? The one here does not need to be filled. But even if it does, like even if it decides to go and fill it, we're still in an uptrend, so no problem. But the misconception is, do not trade gaps. Really, seriously, gaps are not for trading. Gaps are basically discrepancies in prices between liquidity providers and brokers and traders. So it's not a very reliable thing to trade according to. So some gaps will never close, like the gap on 1,600 on gold. Imagine you trying to sell gold now, or ever since you've been trying to sell gold, to close the gap at 1,675. Imagine what would have happened to you if you had like millions. All the millions will be wiped out. Today we're at 4,000. So do you get my point? It does not need to get filled. That's a misconception. Okay. So what did I want to say? Let's move now to Euro USD. Let me check if there's a very big gap. Not really. I just saw it. It's not very big, no. 4th of October, let me check. I'm gonna go and check it for you. 4th of October. Yeah, it's not a very big gap, no. It closed 97.7, and like it's a 20 cent gap, man. No, it's not a big gap, and it does not need to be filled. So no. After dollar, who can we look at gold? Of course, we will look at gold, and we will analyze gold. But first, let's go to the session high and low daily. Is session high and low and daily high and low good for trading? Yes, you can use them. That's a strategy, or that's a method that some people use, and it works for some people. For me, I don't trade like this. I read the price action. Whatever the price is telling me, I would never like just bet that the London lows must be swept. No, this is, for me, this is bullshit. I'm sorry. Nothing must happen in the markets. The markets does what it wants, and you need to react to what you see, not what you hope to see. Okay. Okay, so moving to Euro USD. Okay, so we closed a very bearish candle here on the what's it called, the Euro USD. I think it's safe to start placing sell orders on Euro USD around the 1.1650 with stops above this at 1.18. So yeah, I was waiting for this candle to close, and it did close, and I think it's safe for me now to place my order. This trade is a real trade, by the way. I'm going to take it, and I want you guys to hold me accountable for this trade because I don't want to close it early. Let's go to the weekly. Weekly also closed very bearish. Now, you see, guys, like when we were discussing the DXY, I told you that I'm expecting a correction to the downside in DXY. So conversely, I'm expecting a correction to the upside in the Euro USD. So that's why it makes sense. It's connecting. All right. So this is called intermarket analysis. You're like aligning different things that are negatively correlated with each other, things are which are positively correlated with with each other, sorry, and so on. So the hourly is still trending down. I believe the first what's it called, target that we are heading to is the 1.14. Once this is broken and like cleared, similar to the 100.5 points on the DXY. So once this is cleared, I'll start looking for like a correction to the upside so that I can start buying. And by the way, those arrows that are like drawn are not they're not what's it called, they're not random. So this area would be the 61.8 area, and this area would be the, yeah, no, this area would be the 61.8 area, which is 1.17. So those lines were not drawn like randomly. I'm waiting for Euro USD to go down here and then go up here, correct, so that I can start take my buys or sell, sorry, and place my stops above this high. And that's it for the daily time frame. Let's go down to the 4-hour time frame. I think it's safe to do this now because it connects more, and we have a slight drop here. We have a mini trend on lower time frames. We can see this on the hourly. So here would be a good sell with stops above 1.1580, targeting what is the next level? Actually, we don't have any strong levels till here, so you can target 1.1450, selling from here like 100 pips. Let me check if we sell from here, stops above here, and TP around here. Yeah, so it's a 1 to 2, not bad. This would be a good trade. Let me check the hourly time frame. No, that's the hourly. Let me check the 30 minutes and see if we have any setups. Yeah, look how beautiful this is. We have lower lows, lower highs, and we're close to the trend line and the 50-day moving average, and we're getting a rejection. If this closes as an engulfing candle or a rejection candle, I would wait for a slight retracement to the upside. I would sell, place my stops here, and go all the way down. Or if I want to be more safe, as I told you, I would wait for this to close, sell somewhere around 1.1540 with my stops here and targeting 1.1450. But the way I would do it is this. I would take 2 trades. One here Okay, with this stop targeting 1.1470. I don't even want the whole target. That's a 1 to 9. Okay, and I would take another one at the same area but with different stops. The stop this time would be here, and I would be targeting this area. So I have 1 to 2 and I have 1 to 9. So let me tell you what happens if this one gets triggered. So if I sell here, you see this one. Let me put it away. Okay, so what this will do, I'm risking the exact same amount. So I risk, for example, 1% or 0.5% or 0.2%, depends. So if I'm risking 0.2%, if I decide to enter this trade and risk 1%, what I would do is divide my risk by 2. I would cut my risk in half and divide it on 2 trades. So 0.5% here and 0.5% here. If this one works, I'd make 4.5%. If this one does not work, I'd lose 0.5%. So if this one works, I'll make 1% because I'm risking 0.5% and it's a 1 to 2. So I end up, or I finish the day in the up or in the positive. So that's what I would do. But this is on you. I'm not giving you any signals. I'm just telling you what I would do. All right, all right, all right. Did forex session timings change? Yeah, they changed. In some countries, they changed depending if your country changed the timing. So yes, of course. I think this is it for Euro. No questions. Let's move to GBP USD. We start with the monthly. Okay, we closed very bearish on the monthly. And I believe now we're going, like, we just made a, what's it called, a failure swing, clear on the weekly. Look, so it failed to break a new high and it broke a previous low, and it closed below this area. So this is a very bearish sign, but we have a small problem, which is we have 1, 2, 3 moving averages waiting for it. So the drop will not be as easy as we want it to be, even if we decide to sell. So my recommendation would be I go to the daily, I check the trend lines, and here I can clearly see that we're making a new trend line, or we're following a new trend line. So what I would do is once it gets here around 1.3280, I would sell with my stops here or here, depending on how aggressive I want to be. And that's pretty much it, guys. It's pretty much the same as the Euro USD. So it's bearish for the week, but just to give you a heads up, we're expecting a drop in Euro and in GBP and a rise in USD. But after this rise in USD and drop in Euro USD and GBP USD, we're expecting a correction. So like, don't hold your shorts for too long if you're shorting Euro or GBP, because it might reverse any minute and decide that now it's the time for the correction, the one we saw on the monthly time frame and daily time frames. Okay, you're welcome. You are welcome. Someone is saying thanks for the Euro USD analysis. You are very welcome. I think now it's time to move to everyone's favorite. Yeah, what's everyone's favorite, guys? Drop it in the chat. What's everyone's favorite? Let me check. If you know what everyone's favorite is. What's everyone's favorite? I'm not moving before you say. GBP, JPY. No, that's wrong. Everyone's favorite is gold, my friend. Yes, as Shandyman said. Everyone's favorite is gold, so we move to everyone's favorite, and we see that we closed the month very, very bullish. Even though there's a big wick here, but this means liquidity. Okay, it did not close a bearish candle. It's still a bullish candle. It's a green candle. It had the chance to close below 3,800, and if it did, we would have been due for a very big correction all the way down to 3,500, possibly 3,100, but it did not, and it closed above the 4,000. So I want you to think logically about this. In October there was a huge drop, the biggest daily drop in a very long time, right? Like 5.7% in one day. That was like the biggest daily drop in 10 years. So October was a tough month for gold, yet it managed to close above 4,000. So this is how I want you guys to think about the markets. I want you to use your common sense. It closed above 4,000 as a level. So what is more probable? That the gold will stay in the uptrend and keep going up, or reverse? That's what I want you to think. That's how I want you to think. Okay. So the monthly candle shows a very strong close. The weekly, as we saw, it got rejected from this moving average. It closed below. It reached this area, and it closed with a big rejection. So this one is actually like $200. This week is a rejection of $200, which is no kids play. Okay. So we go now to the daily time frame, and on the daily time frame, what we see is an engulfing candle at a very important level, closing inside the band and with a 50% retracement. Now I'm expecting gold to continue going up once it breaks the 4,047, which was Friday's high. Once it breaks this, we will have something we call in technical analysis a failure swing, which is, let me show you what a failure swing is. So a failure swing is basically, okay, so we were like trending down, right? Then suddenly we break above this. Okay, so we fail to break a new low, and we break above this, and not only break but close. If this happens, I'm expecting gold to keep going up. If not, and if if this resistance remains intact, which is Friday's high, the 4,047, 4,049, let's say 4,050. Okay, if this resistance remains intact without getting broken, I believe we might be still going down slightly, like two more $100, like $200 more. Okay, so that's the 4 hours. That's the hourly time frame is. Good morning, Saif Qaddoura. Good morning. Good morning. Can you please check German 40? If we have time, I will. Yes, no problem. Okay, so we still have on the hourly time frame, we still have this strong level, which is, as I told you, the 40-45 or 40-50 level. If it gets broken, we might be like going up. Most likely, we'll be going up. If not, if it keeps like resisting price to go above it, we might be going down. So those are the two scenarios. But logically speaking, from what we saw on the monthly, the weekly, and the daily, I expect to see gold going up from here, not down. But we still don't have any confirmations, so I would wait and see before taking any trades. Yeah, I believe that's it. I would wait for a setup here to sell, because this would be very close. My stop loss would be very close by. I would be waiting for a sell setup here. If I get it, great. If not, I'll wait for it to break above, retest, so that I can buy and keep going up with this trend line. So, guys, the problem here is why can't I consider this an uptrend yet? Because I still don't have 3 higher lows and 3 higher highs. I have 3 higher lows, but I don't have 3 higher highs. I have 1, 2. So it gets confirmed once we break Friday's high. So if you can see, the moving average is confirming the same thing. Price action is confirming the same thing, and the basic or the classic technical analysis is confirming the same thing. So we need to break 40, 50, so that, and close above, of course, so that we can start seeing gold going up. Otherwise, we're still in a medium term or a short term downtrend. Okay. You are welcome. You are very welcome. Okay, so let's move quickly to German 40. And then we go to USD JPY and we end the live stream. So the monthly, oh no, that's a daily, sorry. So the monthly, yeah, this is not pretty. It's been like rejecting very hard for like a few months now. 1, 2, 3, 4 months. It tries to go up, it makes a new all-time high, and then it gets rejected and closes inside the range. So this is not very good, to be honest. And I think it's getting ready for a big drop, maybe around this area, or even to retest the big trend line, which is around here. Okay, which is around here. Okay, so we might be due to see a $2,000, €2,000 drop or 2,000 point drop on German 40, but that's on the weekly time frame. Do not sell based on this. The daily looks also very bearish to me. It's not like it's trying very hard to close above this level, but it seems like it cannot. So that's a bearish sign. Once I see 3 lower lows, 3 lower highs, and I get my downtrend, I would be selling. Like, for example, I need to see this happening. I need to see this, 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 and this. Okay, after I see this, what do? I draw my trend line and I start selling and going with the flow. But as of now, it's still in an uptrend. But even though it's in an uptrend, I wouldn't buy, because the monthly time frame shows me that it's getting rejected from the highs that it's been trying to break or close above. So it's showing me that there is weakness in the German 40. So I wouldn't buy, even though I'm still in an uptrend, but it's losing steam. And if we check the MACD, we'll see that the momentum is fading. We're seeing higher highs in prices, but lower highs in momentum. So this is a negative divergence, which could mean like a possible reversal in this wave very soon, but not just yet. Okay, what else do we have? Someone asked for USD JPY. We end with USD JPY. Let's take a look. So it went back up and above the trend line. So yeah, this is gone. And if you can see, we see that we're above all moving averages on the daily time frame, and we still have more room to go on the momentum indicators. So we're good. This has been invalidated. We have a new slope of a trend line here. Okay, so every time it reaches this level or this level, this trend line or this trend line, it might be a good sell. Okay, but for now it's very bullish. and basically this bullishness is coming from the US dollar, because as we saw, the DXY is reversing to the upside. So that's why, because it's the base currency in this pair, it's driving the pair higher. Okay, so it's not that the JPY is very weak, not only that, but the pair is driven by the strength of the US dollar. Makes sense, guys? Okay, so I think this is it for today. I hope this was helpful. As always, use stops, trade responsibly, and if you need or have any questions, you know where to find me. Take care of yourselves and always trade in. Bye bye.